I earn my salary monthly. Why should I pay my rent once a year? If you're paying your rent monthly, think about it, you're less likely to default than having to come up with 50,000 dirhams in one go. Sometimes 500,000 dirhams in one go, depending on where you're renting.
Today's guest is Mohamad Kaswani, former managing director of Mortgage Finder, part of the Property Finder Group, and a venture builder who has spent years working at the intersection of technology, real estate, and financial services.
The most important factor in the home buying decision is time.
I bought your arguments. I want to buy in the UAE. Sometimes you get overwhelmed. So many developers, projects, off plan, ready, mortgages, mortgage advisors. Where do I start?
There's a finite amount of land on this earth. And particularly in this part of the world, we're overproductive. So there's a growing population. This is by far the most pleasant place to be in the whole world.
So how do you balance that drive for making people's lives better with the amplified impact of volatility these mortgages can bring?
There's something really unique about the UAE, where in most markets in the world, you find the private sector quite often pushing the regulators. In here, it's the regulators pushing ahead of the private sector.
Assalamu alaikum and welcome to The Mal Show. In this episode, we dive into the mortgage and real estate ecosystem and we discuss why the mortgage process has historically been complex, how technology and data are reshaping the experience, and what's really driving the Dubai real estate market today. We also talk about the broader startup and investment ecosystem, the relationship between companies, customers, and investors, and what it takes to build and lead ventures in a fast-moving environment like the UAE. And towards the end of the conversation, we touch on something more personal, the situation in Syria and the support initiatives taking place there. Today's guest is Mohamad Kaswani, former managing director of Mortgage Finder, part of the Property Finder Group, and a venture builder who has spent years working at the intersection of technology, real estate, and financial services. Before we dive in, we'd like to thank you for your constant support for The Mal Show. And don't forget to subscribe to our channel to get the latest episodes. Let's begin. Mohamad, thank you so much for joining me.
Habibi Youssef, thank you for having me.
Real pleasure to have you.
Thank
and I love the t-shirt.
Thank you. Yeah, this is people keep asking, "What are you doing? Where are you going? Are you staying?" I'm like, "Where would I go? This is home."
Great to see the spirit.
Yeah.
Kaswani, the other home that you're very, very bullish on and preaching a lot about is the Syrian, specifically the tech ecosystem.
Yes.
You've been a big proponent of it. Now, most of us don't really know what's happening there. Unfortunately, it's been 15 years, which unfortunately are the same 15 years where the startup ecosystem has developed in most countries. So get us inside that ecosystem.
So it's not just most of us. I didn't even know up until February 2025. I had no idea. We around February of last year, January of last year, a friend of mine called me from the Valley and he says, "Hey, we're putting together this group of guys in tech. We're going to go and check out the tech scene in Syria." I said, "Okay, sure. Tech in Syria, really? What's happening?" So anyway, about 6 weeks later, this thing turned into a conference with 700 attendees, about 160 of us from the diaspora who went there, and the rest were local. So 700 from the local community and us. And we were all absolutely mesmerized by the talent on the ground in Syria, by the energy, just this beautiful youth flaming with optimism. And that's how Sync was born. Sync as a Syria next chapter.
What's Sync?
So Sync is an NGO based in the US on a mission to create 25,000 tech jobs in the next 5 years. That's the core mission of what Sync is. And then it evolved over time and when I say over time, it evolved incredibly quickly, where we also we were declared a national initiative by His Excellency Abdel Salam, Minister of Telco, and the organization worked very closely with the Syrian ecosystem on building bridges and relationships with the global tech ecosystem. So there was a visit to Silicon Valley a few weeks ago, where there was a ministerial delegation as well as the U.S. Chamber of Commerce, supported by Tom Barak, to visit a ton of tech companies. So Meta, Google, OpenAI, Anthropic, etc., for engagement.
What was the reaction like when you launched the organization in Syria? How did you feel the reaction to that was?
Um, uh, Overwhelming with kindness, right? So naturally, when this thing turned into a conference, and we needed funding and sponsorship, right? We started calling everybody we knew, look, you've got the local, the local Syrians as well as the Syrians in the diaspora, where in so many words it's kind of expected or a natural,
Out of duty.
out of duty, that we all participated and we supported financially whenever we could, as much as we can. Um, One of the most heartwarming, uh, uh, gestures of support we got was from, I remember at the time it was Said and Nashif from Ra'id Ventures, right? This was in the February conference. So remember, February 2025, Syria was still like a bit like an off the beaten path,
No one knows how it's going to
destination,
which way it's going to go.
And Said found out, right, that hey, there's this conference happening in Damascus. He came in last minute, right? And he showed up and he attended. Said Falastini works for a largely Saudi fund. What a beautiful human being he was. And then a couple of months later, I had dinner with what an amazing team. Said Nashif, Omar Majdoui, and Wa'il, who I think you interviewed
we
in
had
your
on the show.
podcast a couple of weeks ago.
Looks like it's a dream team all around.
Amazing people, right? And we were having dinner in Riyadh, and the three of them were really, really interested in Syria, right? But they're not interested purely from an investor lens, right? They were interested, it seemed, from a more of an altruistic place. How can we help? Was the question asked, right? It wasn't where should we invest. It wasn't where are the opportunities. It was, hey, it's great to see this country after so many years of destruction and those people suffering for nearly 15 years. It's great to hear the story about about the youth and the ambition and reemergence of that community into the global ecosystem. How can we help, right? And they came in as a sponsor. You've got this amazing team at Shuruq. I know Muzaffar Alwan was there early on. Mahmoud has always been supportive. Shane was very supportive. Bilal has always been very supportive. And then when we did, so Sync also hosted the very first pavilion for Syria as part of JITEX. We were at Expand North Star. So we had this wild idea, the Dubai chapter, of saying, hey, we're going to promote Syria and have presence at Expand North Star. And His Excellency Abdel Salam came in for a fireside chat, as well, I think with Reuters at the time, and we had this beautiful pavilion, and I remember one day when I think that the night before at the setup, a couple of people walking by and saying, "Oh, this is cool. Syria is online." That was the theme that we had it. And then I think everybody in the ecosystem came, right? Roni came by, Ronaldo Mshahwar came by, the Wamda team, and the one and only, the Godfather, Fadi Ghandour came by, Dani Farha came by. A lot of people showed us love out of the investment ecosystem and are genuinely interested in helping and supporting.
I love the genuine pride in your eyes and your smile when you talk about Syria and the UAE and how you're able to bridge between your two homes.
Sheikh Mansour Sheikh Mansour bin Mohammed was incredibly kind, to come visit, because it's a big show. They're driving, they're walking by. So the fact that he chose to stop and ask questions, it meant the world. Saeed Gargawi was there and also very, very supportive. His Excellency Hilal. It's truly heartwarming. Like, look, this we've seen so much suffering in that country, right? And when I say we, I didn't even go for 13, 14 years, right? I didn't even see it. So I really think those people deserve a chance. And when you go in, and Yusuf, please join us. I think the next event is going to happen in August, September. I want you to see that that youth flaming with hope, right? It will change your life. I promise.
Count me in.
All right. Thank you.
Some people say we're still very early because there's still maybe the electricity cuts, maybe the infrastructure isn't there. How do you reconcile these massive ambitions with the realities on the ground?
Resilience, right? So if you think about it, obviously the power and internet has improved significantly over the past 12, 14 months. But I think that was the essence of why we were all pleasantly surprised, or I use the word mesmerized. Um, it, you watched an ecosystem with more than 200 apps, a couple hundred tech startups, also thousands of local talent supporting regional and international companies. We had no idea. And they're operating in an environment with no internet, no electricity, no nothing really prior to December 2020, 2024. The resilience of our society in the Middle East is something that I have always uh, uh, I've always believed in, and I think is worth betting on.
What do you attribute that to?
Um, I think there is an advantage to adversity. Right? Uh, the more difficult the more difficult an environment is, I find that the more resilient you find people to be.
We've had our fair share of these.
Sure have. Yeah.
For better or worse.
Yeah. And I like honestly, look, I don't know if it's DNA, right? Or I don't know if it's simply a human survival instinct, right?
There's
I
a
don't want to
paper
make it
by
something. Yeah.
there's a paper by Laura Joy, who's a Lebanese neuroscientist. She says that as generations are impacted by consistent adversity, that starts getting wired into the genes. So you're absolutely spot on that can end up being
Yeah.
biological and can end up being even generations who have not necessarily experienced adversity themselves. They can still end up exhibiting kind of disproportionate resilience. So you're spot on.
Yeah. 100%.
Very interesting. Now, your work with the Syrian ecosystem is not a kind of a standalone. You describe yourself, or people describe you as a fervent mentor, and mentorship is really a very important part of your DNA.
Mm.
What's the story behind that? Why is that so important to you?
It was mentorship who got me this far in life, and so many people throughout my life and career have touched my life in a positive way and helped me evolve over time. And I saw that, I genuinely I saw that result firsthand. And I'd always wished I could be in a position where I can do the same to others. Since my days in the U.S., people who really didn't have to help. They were There's random strangers, from another country, just extending a hand to a Mohammed from Syria, and saying, "Hey, how can we help? How can we, help boost your career? How can we, help better orient you with the culture, etc." And then I had a couple of mentorship relationships early in my career that were people who were really hard on me, right? But it had a lasting impact, and it made me who I am, and it made me a better version of myself. So I'm always obsessed with the opportunity to do the same onto others. And frankly speaking, there is nothing that I enjoy more. I enjoy mentorship more than I enjoy building businesses, right? And somehow, people tend to listen to me. Maybe because my wife says I'm in denial about my age, so I act and I speak a lot younger than I actually am, and I think for whatever reason I'm able to connect really well to people in their 20s.
You seemed quite touched as you talked about some of the mentorship you received. Are there specific stories you recalled as you were saying this?
Yeah, 100%. Eternal gratitude to some of them. I remember there's a gentleman by the name of Paul Lounces, right? Paul took me on when I was a junior at university, so my third year. I was studying business. I was absolutely clueless, borderline fresh off the boat. Only a couple of years into my life in the U.S. And the dean of the business school at Penn State at the time introduced me to Paul. At the time, he had maybe, let's say, $70-80 million AUM. Today, he's a couple of $1 billion AUM. He was an asset management business. Guy had a great sense of humor. And, when he just met me for like randomly 2-3 minutes. And I said, look, I'm really interested in learning more about the investment space. And I want to be, I want to be an analyst. I want to be in investment banking. I wanted to be you, Yusuf, essentially when I was at
I'm
university.
honored.
Thank you, Habib. I said I really wanted to get into investment banking and learn more about it. And then Paul started cracking all kinds of jokes about it, like the Syrian kid wanting to be an investment banker with his New York accent. He took me on and he took me on his wing, and he invested so much time and energy, showing me the ropes. And it really, what I learned from Paul, I still use 20 years later, right? He was a value investor, so he was a very strong believer in studying businesses in extreme depth, right? Which is something that you don't see very often around this part of the world. We tend to fixate a bit more on optics, if you'd like, than the substance behind the business. Paul really changed my life in that sense. And then, look, I can count dozens and dozens of people, after that, who have really touched my life and were there for me. Careers, as you very well know, Yusuf, are not a series of success stories, right? I think you have success stories and you have failures as well. And those who show up for you during the good times and the bad times, you'll always be grateful for.
Why would someone do that, like Paul? Because we talked about resilience and we said resilience may be biology, maybe DNA, because it's survival and it's better for you on a biological level. Now, when it comes to helping others and mentoring others, maybe you can argue that some of it is also you pay it forward, you pay it back, etc. But Paul has been very successful, you've now very successful, may not necessarily be explained by DNA or by self-benefit. Why would do that? So what does it tell us about humanity? What do you think is the driver?
Look, if I'm honest with myself, I find more joy, right, in giving mentorship than anything else in the world, right? So I think it's fulfilling, right? Some people admit it, some people don't. So, in a way or another, and when I've been in a position where I'm wearing the mentor hat, people say thank you, and I genuinely say no, thank you, right? Because I find so much inspiration in some of the the young people that I mentor, and it's not just young people, right? It's young people. It's a lot of very successful startup founders, and people in the business community. I find joy. I learn a great deal, right? And then you find it quite often on both sides of the table, right? When I'm speaking to people, I'm usually self-deprecating, right? And I hold myself to very high standards, and I'm always beating myself up. My mentor on the other side is quite often saying, "Wait a minute, right? Can we take a step back and acknowledge what you just went through?" I'm like, yeah, maybe that makes sense. The same thing happens when I'm mentoring. When I'm holding the mentor title, and I'm supporting somebody. They don't see how brilliant they are, and how capable they are, and how resilient they are. And when I see the result of sometimes all I have to do is I listen to some kid for 30 minutes, right? Moan and my life sucks. It's been so hard. Some of them in tears, and I just listen for 30 minutes, and then I just say one thing. I'm like, okay, can we take a step back, please, and think about the fact that you've accomplished 1, 2, 3, and then he or she would pause, and then I would say, right. So what makes you believe if you've accomplished 1, 2, 3 that you can't accomplish 4, 5, 6, right? And it works somehow. Yeah.
Now, what are these standards, ethical and professional, that you hold yourself up to?
I think above and beyond anything else, it would be integrity, right? I'm a bit old school. I'm in my late 40s, Yusuf. So, um,
Now I understand why your wife says you definitely don't look like late 40s.
Habibi, uh, I uh, I value relationships a lot more than I value transactions. It's like at a 10-to-1 factor, right? So that's the other thing. I truly, truly value relationships, and I believe it's the right thing to do, and it's also served me incredibly well in life. So integrity is number one. Hard work, right? Because look, um, at the end of the day, and I always say this to young people, success is a very simple formula, right? Success is something that sits at the intersection of luck and hard work, right? Now, it's a formula of some sort, so you could be over indexed on luck, right? But you can't have zero, because if your hard luck is 100 and if your good luck is 100 and your luck and your hard work is zero, you're not going to be successful. So it's that formula, right? So you got to put in the work and then also get lucky.
What about the work smarter, not harder school of thought?
Look, we're able to do it now, right? Thanks to Claude, who I annoy my wife by calling him Claudio, and my best friend, right? It's really making a superhuman out of us. So I think working smart in today's world is it's a non-negotiable, right? Working hard is a bonus.
You had a piece about this shift from ChatGPT to Claude.
Yeah.
What was the driver of that? Tell us about that.
Oh my God. So this was so I um a couple of months ago I started more actively working on building a business and exploring opportunities in the fintech and proptech space. So I launched a project on ChatGPT, and using it for research, et cetera, et cetera. And a week or two into it, I got really frustrated. Right?
Why?
OpenAI leadership in the Middle East is he's a very good friend. So I don't want to be
Okay.
I don't want to be mean, right? In so many words, it was relatively useless for the depth that I wanted to go to, right?
Interesting.
So I switched to Anthropic, or I switched to Claude. Spent a few hours, right? Dumping in a data set, and I had written like my own outside of AI. Usually, the way I interact with AI is, I write my own documents. I build my own. I build my own data, with a great deal of depth, and then I plug it in mainly for support in structure and deeper research and validation and etc. And Claude really took it to the next level, right? So I'd been frustrated with my experience with ChatGPT projects at the time is, it kept giving me deadlines and missing it. So I'd give it a prompt and an input, and it says, okay, let me work on it. I'll get back to you. Okay, how long is it going to take you? 4 hours. I come back exactly 4 hours later. I say, okay, where's my document? Please wait. And then I found myself in a passive aggressive relationship with ChatGPT, right? Saying, you promised me 4 hours, and then it was like, and that 4 hours stretched into days, and the days stretched into weeks, and I was really frustrated. Then I turned to Anthropic, and the ability of that platform to not simply agree with me and validate my thoughts or ideas. It's the depth of research, right? And also reach for data and information was truly impressive. Um, the, its ability to structure financial modeling, et cetera, et cetera. So it, I don't know where to begin, man. Like it's a significantly better experience. Like, for example, I wanted to chart, right, what's happening to, or the impact of time on real estate prices over 15 years, right? And I wanted to, so and we have a data set, and luckily we live in a country where you have open data, so we get data from DLD and etc. Right? And I'd given this project to one of our analysts at Property Finder at the time, and then I'd given the same project to Claude. And I said, give me a chart showing me between 2010 and 2025, right? The average price per square foot. What I wanted to do is essentially have a spreadsheet where my input would be, hey, this property was purchased in 2014 for X. How much should it be worth today? On the basis of prices moving up. That was my input. That was my desired deliverable. It came back to me and it added to the scope, right, on its own, proactively, and gave me insights, right, which is something usually we rely on humans for. You want insights. You don't expect it to come from AI. And it gave me back insights and says, the maximum, did you know that the maximum peak to trough, right, between 2010 and 2025 was, or 2008 and 2025 was 43%, right? And then if you were to discount GFC or global financial crisis, all of this, talk about the UAE or Dubai being a hyper-cyclical market, and there's a lot of ups and downs, between 2015 and 2025, maximum peak to trough was sub 15%, right? So yes, is it a volatile market? Sure, right? But is 15% really going to wipe you out? Or even,
You're obsessed with data. I think one of the other things you talked about is the transparency loop.
Yeah.
Talk to us about that.
I'm obsessed with data. I'm just not very smart. Transparency, particularly, I think, when it comes to real estate and investments, is a prerequisite to success in any market. Investors like to be informed. I think even your average home buyer likes to be informed. What I try to avoid like the plague is opinions that are not backed by data, right? And data simply gives you the confidence to make a better informed decision, right? Where I would say it's not just because I think, so I think means nothing, right? But hey, data as in evidence tells me X or Y. And that's why it's absolutely critical.
Now, you said, let's say 15% peak to trough would not wipe you out. Maybe someone can even argue a 43% peak to trough can be absorbable. But you've been in mortgages for 25 years now, and you've been a big proponent of mortgages, and you label it as it's changing people's lives for good. But obviously, if you have a 43% peak to trough or even a smaller amount with a mortgage, then you can get wiped out on your real estate. So how do you balance that drive for making people's lives better with the amplified impact of volatility these mortgages can bring?
100%. Look, keep in mind, 43% was a global financial crisis. So it's an environment where, again, it's a global recession. It's something that happens once every probably 20, 25 years. So I don't think, right, necessarily people should be planning around that incident, right? Like I said, when was the last time that happened? Nearly 20 years ago now, right? And it's about time people get over it. Now, when it comes to mortgages and real estate, I think the most important factor in your decision, and one of the products that we built at Property Finder at the time is a rent versus buy calculator, right? And my guidance to the team was, from my own personal belief, that the most important factor in the home buying decision is time, right? How long can you hold the property for, right? You can't treat real estate market like you do public equities or stocks, right? In fact, even if you're buying in the S&P 500, even if you're buying liquid stocks, you should have a long-term view, right? Buy into businesses that you believe in the long term, as opposed to speculative trading. And people, unfortunately, many people treat real estate as a speculative asset. It is not. It's a long-term asset to hold. Now, logic is simple, right? There's a finite amount of land on this earth, right? And particularly in this part of the world, we're overproductive. So there's a growing population. Now, you narrow it down to this beautiful city that we live in, And within a 4 hour flight around us, this is the most, or even longer, right? This is by far the most pleasant place to be in the whole world. And that's why we've been seeing this massive population growth. Nearly 1,000 people a day were moving to the UAE last year in 2025.
Now, the alternative point of view is yes, there is finite amount of land, and maybe in islands like Hong Kong, like Singapore, etc. But maybe in places where there's a lot of desert, does this kind of counter that point?
It could, if demand growth wasn't as real as it is over here, right? So we can't build them fast enough. And again, this is going back to, let's say, February 2026, where we're seeing that demand of nearly 1,000 new residencies being issued in the UAE every single day, right? So 1,000 new residencies would suggest you need at least 300 units a day, right? Just imagine every single day you need to be adding that kind of stock to our housing market.
And when you look at this kind of buy this versus rent calculator you have now, and I know it varies by district and personal circumstance, etc. But generally, what is the data telling you? If I'm in the UAE today and I'm looking at this calculator, what am I likely to get? What should I do?
So there is something quite unique about the UAE or Dubai's real estate market, right? Where your mortgage rates are lower than your rental yields. Right? So your typical rental yield for a Dubai property is 6 to 7 or 8%. Right? And mortgages are lending at sub 4%. Right? Which means, in essence, it is less expensive to own than to rent. Now, you chart this over a 5, 6, 7 year period, right? Particularly, I would say at a minimum 5. If you stay in a property for 5 years, right, you can absorb up to 15% or more in home price depreciation. So even if the property, I'm not saying stays flat, even if the property drops in price, that means that you're in a better position buying than renting, right? So in almost absolute terms, you're always better off buying than renting if you stay in that property for a long time. And that's why, our team is trained, even the conversation that I have with close friends and family, when people say, do you think we should be buying a house? The first question I often ask is, do you like it enough that you can see yourself living in it for 3, 5 years or longer, right? Don't buy it speculatively, because you also have the upfront cost of nearly 7% and transaction fees that would need to be absorbed.
What about the alternative point of view that says, okay, sure, I'm going to be borrowing at 4% and the rental yield is 6%. So on that calculation, I'm better off buying. However, I'm going to put, let's say, 25% as equity down payment, which I will not do if I rent. And that 25%, I can take it and buy the S&P 500 or buy something else. And that something else will appreciate by more than that 2% difference between buying and renting. And hence, I'm still better off renting, paying a higher price, but my appreciation of my other asset will get me even a higher return.
You can, if you were to treat your property purely as an investment. You're forgetting that we're talking, so when we're talking about an owner-occupied property, we're talking about your home. So, and home is something that I believe people should hold a bit more dearly than an investment. So, what is more valuable to me, right? My home, or an ounce or a few ounces of gold that I own, right? Gold you can always buy and sell. Home is something that you're living in. You're creating a life in. Your children, your wife, your parents, your friends and family, your nice dinners, etc. So there's a significantly higher value to one's home. Now, why is that important? I think we did a survey during my days at Property Finder, and we realized that I think if it was 37 or 38% of buyers were motivated by the big bad evil rental notice. Right? Think about it. You're living in this property for the last 3, 4, 5 years. You have your kids' toys laying around. You have a lot of these. You have a lot of memories, etc., etc. And then your landlord, within their right, sends you a letter that says you need to be out in the next 12 months. Right? And now you're faced with the reality of going from, let's say, paying 200,000 dirhams in rent to 350,000 dirhams in rent. And you're under tremendous financial stress. So there's that stability factor that I think also has a lot of value that people tend to forget about.
Now, you and I are millennials, so we understand the value of stability, the sentimental value, the emotional value. Do you think that carries through to Gen Z, or is there an argument to say some of these things will change over time as we get what is often described as a rental economy, subscription generation, which may not attribute that same value to these factors?
Data is telling us otherwise.
Interesting.
Thank you for calling me a millennial, by the way. I think I missed it by a couple of years. But I'm going to hold this very dearly. I love you, Yusuf. You're so nice to me
definitely a
today.
millennial.
You're so nice to me today. So evidence is telling us otherwise, right? Because we're actually seeing the average age of home buyer, at least the proprietary data that we were looking at Mortgage Finder, the average age of home buyer, median age of home buyer is declining.
Very interesting.
Yeah.
Very interesting. Now, I think probably linked to the same point is some people say don't link the two decisions. For example, if you're in the UAE today, you want to live in a place, that place may be, for example, not open to expats there. For example, the type of house you may own may not be the most liquid or most alluring on the market. So kind of rent the best unit for you from a living perspective and then go and buy the best unit from a rental yield and income appreciation, which may be, for example, maybe a studio, maybe a one bed, maybe different. How do you think about that? Like linking the two decisions, living and buying versus treating them as separate decisions?
Absolutely separate decisions. Your home, right? There's a difference between a home and a house. I don't believe someone's home should be treated as an investment. Right? It isn't. Right? It's home. Now, again, are you committed to this particular home? And more importantly, are you committed to the city? Right? Or are you treating Dubai like a trade show or a hotel or a resort destination that you're just gonna come here, spend a couple of years, make a ton of money, and go back to, wherever. Right? If you're committed enough to the city, if you're committed enough to the life that you're building over here, then absolutely buy your own home. Right? It's not an investment, and honestly, today, it doesn't matter if my house goes up, down, or sideways in price. Over the past 4 or 5 years, our friends in the real estate community, 3 to 5 phone calls a day, right? And they throw all kinds of wild numbers at me. None of it fazed me, right? Whether it's, numbers that would have suggested my home doubled in the first year or tripled or whatever. It doesn't matter. When they gave me really high prices, it didn't faze me. When now, right, they're calling and throwing, very strange offers. It doesn't faze me either. It's home. We like it. We renovated it. It's built for purpose. Our family's very, very happy in it. My mom is incredibly comfortable with her nice little bedroom. It's not so little. We bought this property mainly because of the size of the bedroom downstairs that my mom really, really enjoys. And it doesn't matter if somebody pays me $100 million, for the property, unless I'm able to find my mom a more comfortable bedroom, I'm not leaving.
Now, I bought your arguments. I want to buy in the UAE. Sometimes you get overwhelmed. So many developers, projects, off plan, ready, mortgages, mortgage advisors. Where do I start?
Definitely with a mortgage advisory firm.
Okay.
Right. And look,
even before I find the property itself.
100%, right? Because you wanna know you wanna understand your limits, and plan accordingly. And you want to know how much you can afford, um, uh, and then go find a property for a few reasons. One is you want to be able to calculate your affordability and plan your financials properly. Two is it puts you in a much stronger position when you're negotiating with sellers and real estate agents, right? When you go in and say, "I have a mortgage pre-approval from a credible mortgage provider, like a mortgage finder or a bank, and etc." So it puts you in a much stronger position while you're negotiating, as opposed to saying, "Okay, fine, I'm going to make an offer and then go apply for a mortgage." So you're taken a lot more seriously.
Now, this mortgage affordability concept, now talk to us about it. So let's say I'm going to connect with an advisor, but for me to understand, what does this really mean? How do I calculate it?
So that's what our advisors are trained to do. Usually, it's so you don't have to calculate it as a home buyer. That's why Mortgage Finder, exists. We have calculators online that can help you do it, and then we also have human beings, which is always my recommended path. It's a free service, so you might as well use it and speak to an expert. Um, in a nutshell, central bank here says that your total liability commitments on a monthly basis should not exceed 50% of your monthly income, which means your mortgage payment, your car loans, your car payment, your personal loans, and your credit card bills cannot exceed 50% of your payments. Now, a few mechanics, if you'd like, that I'm happy to get into, right?
Please.
On your mortgage payment, right? It is not calculated on the basis of the actual mortgage payment at, let's say, 4% rate. Banks apply what they call a stress rate, right? Of saying, we're going to calculate your affordability as if rates were 2% higher. Why? Because banks here are overly risk averse, right?
Because I'm borrowing on a floating basis. So that's something running the risk that if the interest rate increase, then but it's fixed for the certain number of years.
98+% of the transactions that we've originated, and I'm talking about thousands of transactions over the past few years, are the 3-year fixed product, right? Which people often refinance after they're done. Now, but precisely this is why they calculate it on the basis of a stress rate that says IBOR, which is today, let's say, in the 4% range, plus a couple of percentage
points. So that
points.
if after the 3 fixed years end, the rates go up and you don't refinance into a fixed, then can you still afford at a higher rate?
Correct. And also because banks here are still traumatized 18 years later by the 2008-2009 global financial crisis. They are refusing to get over it, right? 9 out of 10 bankers I speak to are still living in 2009. Oh, but what if 2009 happens again? So so banks are overly risk averse in this part of the world, which, by the way, it's very frustrating, right? When you think about it from those of us in the industry, or even as a home buyer, because it's incredibly limiting. But at the same time, it's comforting and prudent, right? So all of this fear mongering that you see happening around over potential defaults and etc. is a lot less likely to happen in a market with so much prudence from central bank, right, than it is to happen in an environment like the one we were living in the U.S. prior to 2008 financial crisis, right? And I was in the middle of that storm, right? So I can definitely see the contrast between, and it is a contrast. It's an extreme between how prudent our financial system is here and how irresponsible the financial system was in the US prior to 2008. So back to affordability. They're going to calculate your mortgage payment as if your rate was a couple of percentage points higher, right? Then they're going to, fixed installments like personal loans and car payments. Now, this is where banks get a bit annoying. Let's say, for example, I have you have a car payment, right, or a car loan with only 6 months remaining on the loan, right? You're going to still take a hit on your debt service ratio. I'm taking a 20-year mortgage, right, and you're evaluating my affordability on the basis of the next 6 months, right? Like a little bit of
So are you better off on these cases just closing some
100%.
of these? Okay.
Which is where our advisors come in handy, right? Because we, the advisors would take a holistic view of your financials, and then they advise you to make certain tweaks accordingly. I don't know, lower your down payment by X, 20,000 dirhams and pay off these loans. Now, the third thing they look at is credit cards, and this is very important. In the US, in fact, in most markets, right, your credit card debt with the credit bureau is usually calculated on the basis of your average outstanding balances, right? In the UAE, they don't calculate affordability on outstanding balances. They calculate it on the basis of your credit lines.
The whole limit.
The whole limit. So let's say, for example, right, I have a credit card with a 300,000 dirham limit, right? But I pay off the balance every month. My balance is zero, right, at the end of every month. Sometimes even negative, right? Sometimes we overpay.
Yes.
So, but then central bank or the banks here calculate your affordability as if you're paying 15,000 dirhams a month. That is 5% of your total credit limit. So a lot of times what we're having to do is we advise people to lower or reduce their credit lines.
You also mentioned the mortgage. You gave an example, just hypothetical, of 20 years. Do you always encourage people to max out the number of years they can take so they can reduce the burden and do multiple things with their cash over time? Or do you say, just try to compress it, get it done, so kind of you get it off your back and you move on to something else?
I can think of 75 things that would yield me better than 4%, right? Almost no matter where you put your money, you can make better than 4%.
So max it out.
Absolutely maximize it, I think. Yeah.
Some people just psychologically, they think of debt as a burden that they don't necessarily want to carry for the rest of their lives. Also on the title deed, it's like the name of the bank appears, it's mortgage. Is this just psychological? Do you see that in the data, or is just I'm like...
Look, not all debt is created equal, right? Credit card debt, particularly in this country, is quite painful. 44% interest, right? 44%, or as some banks would call it, profit. It's painful, right? If you get yourself into a credit card debt hole, it'll take, it's very, very, very difficult to get out of it, right? Because it's compounding, right? And that's why a lot of people you find, let's say if you have 500,000 dirhams in credit card debt, right, you're paying 25,000 dirhams a month, and your balance is remaining the same.
Wow.
So make that 50,000 dirhams in debt, right? You're paying 2,500 dirhams a month, right? Every month. That's a car payment, right? Could be someone's rent. Paying 2,500 dirhams a month on 50,000 dirhams of debt, and your balance is staying the same.
Wow. Now, you're kind of, I know you have the consumer's interest at heart from an ethical perspective, but at the end of the day, you're also a business. And whether you're a mortgage advisor, whether you're a bank, you're a mortgage provider, you're kind of in a way on the other side of this, right? Where you're making money. How do you balance that interest? How do you balance that kind of ethical question?
That was the first thing I obsessed with when I joined Property Finder, right? Is I looked at the time, this was September 2021, right? Property Finder had acquired Mortgage Finder a few years before, but it was like a sort of a dormant asset, sitting within the huge success story that Property Finder has been over the past few years, and it was a bit untouched. So I looked at this business, met the team, right, and I realized something fairly consistent, and that's the integrity of people we have, right? They really did acquire a great business. It was a formidable team of people who were seasoned in the industry, and more importantly, who had integrity. And there was a culture, right, of advising in the best interest of home buyers as opposed to the best interest of the mortgage broker. And that is proper forward thinking. The question I then ask is, okay, well, this is great, but there's like 5 of them, right? I want to 10x this business, right? So how can we build it at scale, right? How can we be an honest mortgage advisory service at scale, right? And we did it through a couple of things. One is the incentive structure, or the commission structure, was aligned with the interest of the home buyer and not the interest of the mortgage broker. So 99% of mortgage brokers in the UAE and globally, right, they pay their mortgage advisors commission only. Well, guess what? You have banks who pay 50 basis points or half a percentage, and then you have banks who pay 1.5%. How do I know, right, that my mortgage advisor is advising me to go to the bank that makes the most sense for me, as opposed to the most sense for them? So we created a compensation structure that aligns with the consumer or with the home buyer, as opposed to the mortgage broker, by paying them a salary and a commission structure per transaction that is not directly correlated to how much money we earn from the banks.
Interesting.
Right? So that's one. You fix it. Two is we put a lot of safeguards and quality assurance standards, if you'd like, to ensure we audit. I personally obsessed with it for many years, where I would go in and I would audit the advisory that was provided to our borrowers, and again, it had to turn into an obsession, right? I interviewed each and every single new mortgage advisor who joined the company, right? And there is usually my one question where I decide whether or not they're going to join. So they go through a series of interviews, they meet the team leads, they meet the sales director, etc., and then they come to me, and I'm usually asking them 1 or 2, 3 questions, and usually I give them a formula, and I say, hey, we have this borrower who qualifies for HSBC and DIB, right? These are the terms from HSBC and these are the terms from DIB. Long story short, I build a formula for them that shows one bank better for the borrower, but less money for the business, and another bank that is better for the business, that is a less favorable deal for the borrower, but better for the business, right? If they choose this one, they disqualify immediately, right? If they choose this one, if they choose the one that is better for the borrower, then that's usually a sign of, so it's doing two things, right? One, it's giving us a sign that this is somebody who has natural, and naturally inclined to have more integrity. The other thing is, you're setting the tone from the very first interaction the mortgage advisor is having with the MD, with the guy running the business, that's what matters to them. The last thing is, one of our key, if not the key, and I've obsessed with it. I hope, and I really hope the team maintains that legacy post my departure. There's one metric that I obsess with consistently, to a point where I drove people nuts for the 4.5 years that I led Mortgage Finder, and that is 5-star Google reviews. Right? On every board pack, right? Every quarterly business review or every weekly business review, every conversation with the team, every all hands, every post I celebrate on our internal Slack channel, right? All I talked about was 5-star Google reviews. So when I went in to deliver my quarterly business review, corporate world, they have all these acronyms, QBRs and WBRs and blah blah blah. When I delivered my QBRs or WBRs to Michael, right, the first metric I would report consistently was 5-star reviews. Right, that's saying something, right? The last metric I reported was bottom line, or EBITDA. Right, even though we delivered incredibly impressive EBITDA, we over the 4.5 years that I spent with the business, our EBITDA margin 10x'd.
Wow.
Right? So you went from lower single digits to very, very healthy double-digit EBITDA margins.
Wow.
But that was the last thing I reported. First thing was 5-star reviews.
Wow.
It turned into an obsession.
Wow. Now, one of the things you mentioned is which bank to go to. Some people say I just go to the bank where I transfer my salary because that always offers me the better terms because they have the salary security. So they're more inclined to offer better terms than other banks. Is that true?
True, but inconvenient. Right?
Mm.
So, look, if you are if you're a lifer, right? Which some people are, some people love their employer, they want to be with it for the rest of their lives. Fine, maybe. The problem you have with the salary transfer mortgage is if you change your job, it is a royal pain in the head um, to manage your finances because the bank's gonna put a block on your checking account until you go find another job, and it's just a big royal mess.
Mm.
Okay? So typically we don't recommend it. Look, would it make maybe a 25 basis points or a quarter percentage point difference on your mortgage payment? Yes. To me, is 80 dirhams or 150 dirhams worth that risk? No.
Very interesting. What else would you recommend people to do or not to do when it comes to a mortgage?
Um, check the mortgage advisor's 5-star Google reviews. And I'd say, look, don't go directly to banks, right? Because you're going to go to a bank. The bank is only going to offer you their set of mortgage products, right? When you go to a mortgage advisory firm, then you're getting visibility on the whole on the whole market. And the team at Mortgage Finder now is building products that is going to unlock that visibility digitally into another level. So hopefully they're going to take it to another dimension.
Now, when I personally went for a mortgage, the first thing the bank or the advisor asked from me was to get them the credit report. Now, apart from the obvious advice of pay everything on time, how else can I keep my credit report strong?
Mainly pay everything on time. Obviously, the length of history that you have on your credit report helps. I think your credit line utilization will also be a factor. The proportion of your balance to your credit line will also be a factor. Um,
Now, I had made the mistake you talked about on credit cards. So before I got my, so actually I got a mortgage when I moved to the UAE. Then I had another mortgage. So in between, you have all of these credit card guys calling you saying, "Hey, by the way, I've got this free for life credit card and it has Marriott points. I've got this free for and it has miles." And it's all like a lounge access. It's all like nice benefits and lifestyle. And one gives you miles, one gives you. So you keep accumulating these cards and you end up with like 7 8 different cards because each one of them is nice for something. And then you get into the mortgage and then the guy goes, "But these all, as you said, cut across the limit." And then now you need to cancel them or reduce the limit, and you figure out it's much more difficult to cancel a card or reduce its limit compared to getting
Every engagement that has to do with banks is painful. I can't wait for Mal to be born because I know, and I'm really really hoping that the team is working on a much better experience. Yeah, I mean, calling a bank to reduce your credit line is going to be painful. Getting a liability letter, right? So, for example, you want to go and let's say you owe money on a personal loan or a car loan, right? And you want to pay it off. Dude, it took me like 3 weeks to pay off a car loan. Right? I don't want it. If I'm going to the bank and I am begging the bank to pay the money. I want to return your money. And yeah, but you have to come in person. You go in person and they say, I swear to God, I had the story, and I'm not going to name the bank because it's mean. I called on the phone and they said, you have to come in person. I went in person and the guy says, yeah, but now it's a digital process. You have to send us an email. Hamam is Zajil, right? I'm like, are you serious? I could have sent you an email before coming here. So they drag you, you take that token thing and then you wait and, you wait on the chair, 45 minutes, an hour. If you're lucky, you have to find parking outside and etc. And then for you to wait for an hour and then for the bank rep to tell you, you have to send us an email. Fine, I send them an email, right? And then, I wait 1, 2, 3, 4, 5, 6, 7, 8 days, right? It's really frustrating, right? and everything is just compounding time. And it could all happen digitally in an instant. You should be able to get your liability letter in real time now. Right? It's absolutely, so many of the banks here, unfortunately, are still operating in the 1960s. Yeah.
Now, you talked about the concept of stress testing by the banks. You talked about from an interest perspective, interest rate. But as a person, now, how else should I stress test my own financial situation before I take? So maybe today I can afford it. Obviously, there's again the obvious example of what happens if I lose my job. But what else should I factor in as other risks that can happen when I'm trying to size how much can I afford?
It's your look. It's your confidence in your ability to continue generating an income. Right? I think that's the most important question that you need to be asking. How safe is my job? Right? Hopefully you're doing a great job and you're delivering great value, and you have that sort of security. Also, the awareness with what's happening in the world around you. Right? How safe is my job? How safe is how safe is my company? So start with yourself. How well am I doing? 2, how well is my company doing? And 3, how well is the general economy doing? Right? And I think that gives you, answering these 3 questions is going to give you a sense of how likely your income is to be secure. The second thing is, obviously, it's very important to have a little bit of a cash cushion, right? Particularly in this part of the world, where you need to always have a cushion of, let's say, 6 months worth of, if you lose your job today, that you have enough cash that would last you for, ideally no less than 6 months to a year, before you take on a massive commitment like a mortgage. Having said that, Yusuf, this is all theoretical, right? In reality, when I bought my first home, I was under extreme financial stress, but it worked out well, right? So most people that we know, when they buy their first home, it's usually quite stressful and difficult. So I can always give you advice on what's ideal, what's optimum, right? But we don't live in an ideal world, and most people don't optimize.
Makes sense. Now, the other also mistake I made is even though I had in a way taken your advice, not literally because you're just telling me to now, but of extending the mortgage for longer, I had made the mistake of prepaying faster because again I wanted to get this burden off. And then at a time like a good few years ago, there was the option to take home equity out of the apartments. You can kind of refinance it again and use the money. So I did that. But again, I did the mistake of like paying it for the second time, paying it a bit faster. And then when I tried to do this for another time, I was told, no, the rules now changed. You can only take money out now of an apartment if it's towards as a home improvement, or if you're buying another real estate for an approved vendor. But it's no longer like before that you can take money out and go do something. Is that still the case? What drove that change? How do you see that?
This, my friend, is what I call a problem worth solving. It's my property. I built this equity into it by, paying my blood and sweat into my mortgage payment every single month for the last, I don't know how many years. I have 6 million dirhams or 500,000 dirhams of equity available to me at 80% loan to value. What business is it of the bank to tell me what to do with it? It's my money, right? What if I want to pull out a cash advance, right? Or what if I want to pull out an equity release cash so I can consolidate my credit card debt? That's just one example, right? It is a prudent thing to do, right? And it's in the best interest of the bank because it's improving the borrower's risk profile. Yes. What if I want to take out an equity release so I can pay off a personal loan and drop my payment from 15,000 dirhams a month to 3,000 dirhams a month or 5,000 dirhams a month, right? Oh no, you have to use it for either buying another property or renovation.
And even the other property, because I was doing something off plan, even that couldn't really work. It has to be like approved vendor, approved project or something like that.
They have to make it difficult, right? Because I think a lot of, unfortunately, a lot of people in the risk business, um, maybe they're programmed to wake up in the morning and say, how can I make people's lives more difficult?
And they push you towards a personal loan where they make also more money because the interest is higher, unfortunately, right?
Yeah. I mean, it could be let's call it a conspiracy theory. It could be possible. But look, um, uh, financial access, I think, is one of a is a key enabler of growth in any economy. Um, I have unconditional faith, and it's literally unconditional faith in this country and in this city, right? Where I know with enough of us challenging these weird practices, something will be done. I think the regulators are going to be stepping up. There's something really unique about the UAE, Yusuf, right? Where in most markets in the world, you find the private sector quite often pushing the regulators. In here, it's the regulators pushing ahead of the private sector. So the faith that I have is a lot of these weird, twisted banking practices will be challenged by people like you and I, and hopefully you have maybe some random entrepreneur breaking out some ideas to fix this very problem in the coming weeks or months. But yeah, it's absolutely ridiculous. Ya akhi, what if I want to pull 1 million dirhams out of my property to live my midlife crisis and buy a 911 turbo? شو بدك فيني? Right? It's my equity. Yeah.
Very excited for that.
Don't do it, by the way. Yeah, it's not the prudent thing to do to pull home equity and buy a 911 turbo.
No, it's just
But I'm just using it as an extreme example.
Yeah. But look, I think a lot of people argue at the end of the day, financial freedom and economic freedom, people will make mistakes, but you cannot people are adults, and that's part of the development of the system.
Yeah.
Some people will make mistakes, but economic freedom is a critical part of the development of the system, and acting as a custodian wasi on people just isn't necessarily the right thing to do philosophically, religiously, from a value perspective, even if we have to tolerate some mistakes being made in the process.
Let people make mistakes. Look, I think banks are within their rights to have their own risk limitations. So, for example, you have levers. You have LTV, right? And then you have DSR. So, loan to value. You're capping at 70% or 80%. That's within your right because that's how you measure your own risk, right? And you have recourse. In other words, if I don't pay my mortgage, you can kick me out of my house. What more do you want, right? Yeah. So that's one. Two is you're able to calculate my affordability because we have Etihad Credit Bureau and you have that full visibility. Think about it. When you're borrowing in the UAE or any other mature market for that matter, you are completely naked in front of the bank, right? They can see everything about your financials. They can see how much money you make, how much money you owe, etc., etc. So you know everything about me as a borrower, and you have security over my asset quite often, my home, where my children live, right? Um, what more do you want? Why do you need to get involved? Why do you need to decide on my behalf as if I'm a child and you're the adult, right? What I am to use my money for. It is absolutely twisted. But like I said, my faith, my bet is that our leadership in this country is going to help us drive these agendas across the line.
Now, you mentioned the few obsessions you have. Another obsession you've mentioned previously is the rent now, pay later.
Yeah.
Why is that an obsession?
Oof, man. I'm so over the moon that we're finally working on that partnership at Property Finder with Keeper, for many reasons. I had attempted to solve this problem with Walid, one of the co-founders of Keeper, when we were building when we built Urban, and we did it at the time in a partnership with Emirates MBD. So I've been obsessing with monthly rent payments for the last 5 or 6 years. Look, it's the obvious, right? The rest of the world, most of the rest of the world, people pay their rent monthly. I earn my salary monthly. Why should I pay my rent once a year? Right? That's pure common sense. Two, you are less likely to default, right? If you're paying your rent monthly, think about it. You're less likely to default than having to come up with 50,000 dirhams in one go. or sometimes 500,000 dirhams in one go, depending on where you're renting, right? So you're less likely to default. 3, data, at least in the US, I looked at data that says people are 5 or 6 times less likely to default on the rent payment than any of their other liabilities. So people always prioritize paying their rent. Yeah, we have this 1970s practice. Everything in this country is shiny and glitzy and beautiful, except real estate and real estate finance, right? And again, and I have faith it's going to change. I know it's going to change in the next months. It's that's how much conviction I have, right? It will change, right? Again, it, you earn your money monthly. Why are you paying in one go? You're less likely to default. Paying monthly, and then thankfully now, Keeper and Walid and Omar are solving for this problem, and I've been with them on this journey since day zero, because they took the vision that we had at part of the vision that we had at Urban. And when I think Walid Mansour from MEVP at the time called me and says, "Hey, I want you to meet these guys, to meet Omar," and I introduced Omar to Walid. He says he wants to solve this problem, and I said anything I can do to help. I couldn't do it because obviously there was the Urban saga, and the business didn't continue. But if anybody else is able to pull this off, I will do anything and everything in my power to help them. I even tried or attempted to. We offered Keeper a term sheet out of the growth debt fund that I advise in Europe, and I will perpetually always be supportive of that initiative.
Now, talk to us about this growth debt, because obviously for a lot of startups in the Middle East who have extensive requirements, because either they are lending money, they're in any capital heavy business, and kind of for them continuing to raise equity is prohibitively dilutive, and they kind of look for debt. But obviously most banks would not look at startups because they don't have audited financials with positive net income, they don't have a positive equity balance on the balance sheet, lots of different reasons. So what's this growth debt? How can they find it?
So you have quite a handful of local funds who have who are who have a growth debt fund. I know Shuruq is someone that I will always highly recommend above and beyond anybody else, at least in this part of the world. Flashpoint has been actively searching and originating for growth debt opportunities. Now, why growth debt? If you are a business growing at, let's say, 50% or more year over year, right, and you have healthy cash flow, you have healthy unit economics, right, it is 100 times better to raise debt for growth than it is to raise equity, because as a founder, you're minimizing your dilution and you're injecting that growth capital into the business without having to dilute. That is, if the economics of your business are supporting it, and you're delivering growth, and you have confidence in your ability to deliver growth moving forward. Now, most credible debt funds would know how to evaluate that almost on your behalf as a founder. But I think it's absolutely worth exploring.
Is that the same as venture debt? Is that different? It's the same.
Yeah.
And what's the minimum?
I mean, you know how it is in
Yes.
the investment banking and VC space, right? We always try to come up with fancier words so we can sound smarter.
So today, if I'm a startup, what's the minimum? Let's say I'm in the lending business, I'm a fintech, etc. What is some of the minimum things I need to think about? Is there a minimum amount to raise? Is there a minimum revenue I should be making today?
Yeah.
How do I qualify for something like this?
So different funds have different lending criteria, right? I can speak for Flashpoint because it's something I'm very close to. We usually come on the backside of an equity round, of a fresh equity round, right? So that's one criteria. Two is we usually lend at a 20 to 25% of, so no more than 20% LTV or 25% LTV. In other words, if your valuation is $100 million, we're likely to extend credit up to 20 million dirhams or $20 million or a little bit more for you. The third criteria is we look for businesses that are delivering 50% or more year over year growth with healthy unit economics. And naturally, it's very, very important that we believe in the fundamentals of the business. We believe in the founders and teams, and that's fairly standard growth debt growth debt criteria. Shuruq, to my knowledge, is more in the asset-backed lending space. And the team, I know Joe, a terrific guy. Obviously, Mahmoud is the first-class human of all first-class humans. Capo di tutti capos.
Indeed.
Yeah, I would highly recommend them. Yeah.
And what's the typical cost of instruments like these to companies?
Look, this is where it gets quite competitive, right? Another one, by the way, PFG, Partners for Growth, Army, has been an inspirational, I think, to anybody in the venture debt space, because she's been betting on this part of the world for many, many years, and has been arguably one of the most hyperactive growth debt provider. Franklin Templeton also, they just did a transaction with Keeper. Terms vary depending on the business, depending on the fund. Flashpoint tends to be quite often competitive to a lot of these terms. Usually, growth debt terms are a combination of coupon and warrants. So you're usually paying, let's say, I don't know, 11, 12 to 15, 16% interest on your growth debt, in addition to an equity warrant that usually ranges between 5 and 15%.
How do equity warrants work?
So it is a growth debt funds essentially take an option to buy equity in your business up to 5 years from now at today's valuation. Let's say you're $100 million valuation. We can say, as a fund, we have the option to buy up to 5% of your business for $5 million between now and the next 5 years.
Which is more cash for me as a business. So sure, obviously it's coming at a lower valuation maybe than what valuation will be in the future, but it's also not for free. Ultimately, I'm still getting cash for it.
Yes.
Understood. And what type of security do you take? Like we talked, obviously, the mortgages business very straightforward. I sign a check, you take the deed. How does it work in companies, in startups, in growth debt?
And by the way, mortgages is even more, right? Because mortgage puts you in a personal liability. Mortgage lenders here, are you ready for this? Right? They not only have security over your property, they make you sign a check that can put you in jail if you don't pay.
Weren't these decriminalized, these checks, the UELO?
Not that I know of.
Wow.
Yeah.
Wow. So it's still a criminal offense.
I mean, at least, yeah.
Wow.
So
companies.
usually, again, standard practice, venture debt comes in as senior secured. So in the, hopefully, I hope no founder goes through that experience, but in the unfortunate event of liquidation, the debt provider will recover their investment ahead of pref shares or before preferred shareholders.
Now, this is, I think, what has been one of the common criticisms of venture debt. We've had examples in the region where companies seem to be doing very well, and then suddenly almost disappeared. And the story that came out, now whether true or not, that, look, the venture debt guys don't care because they just want to recover. And as you said, maybe their debt is only 20-25% of the company, but they're just willing to take the keys and basically recover their money. And all of a sudden, 75-80% is wiped out because the interests are not aligned.
Why would I want, as a venture debt provider, right? Why would I want the keys to a failing business? Right? I want the money. So, and look, I watched, and I think this is one of the reasons why I chose to support Dennis, Ilya, and the rest of the team at Flashpoint is I watched how they behave in 2020. Right? And that was when I said, all right, you know what? These are guys worth helping. I watched them desperately doing anything and everything in their power to help raise equity or additional equity to a few startups in Europe whose revenues went down to zero. Some of these guys were friends of mine. That's what piqued my interest, right? And they came in and they said, look, here's a business. We fundamentally believe in the business. We believe in the and we believe in the founders. We know they will bounce back post COVID, right? We need to come together and help them. So they offered them, for example, they offered them relief and paused debt service payment for I think 6 months or 12 months, even in some cases. In a case, they even extended more credit. And then they called every equity provider under the sun that they knew, trying to provide that support to the founder. That's the kind of partner that you want. I'd say, when you are if you're a startup and you're seeking venture debt, or if you're seeking capital to begin with, right? Optimize for. And I think this takes us back to the beginning of our conversation. Optimize for the relationship, not the transaction. Do you trust this investor? Have you asked about this investor? Did you get references? How good is their reputation? How honest are they? Etc.
Now, if I'm on the other side of the table, I'm the founder. As you said, the fund is looking for me to demonstrate in difficult times how I will bounce back and how this is a real business. What sort of things, both in terms of traction metrics, etc., and in terms of mindset, that I can demonstrate that make people make the decision to come in with me on the journey, stay with me on the journey? So either I'm a founder who's starting or I'm a founder in a tough time. How can I come across to you as the right person to bet on?
It's how quickly you act, right? And how dynamic your business model is, and more importantly, how flexible are you as a founder to adjust according to the circumstances that you're in, right? Do we need to pivot your business model? Are you looking for alternative solutions to earn revenue, right? How are you managing your cost at times of at difficult times? How prudent is your P&L management at these times? And then how deeply do you understand your space and your industry in this environment? And are you able to project some predictability over how you're mitigating that risk?
Now, you've been a mentor, as you said. You've been executive in existing companies, you're advisor to venture debt. What connects all of this? Like, who are you at the heart, Mohamad, and what brings all of this together?
Maybe I don't like myself, but I'm a problem solver. I think if you were to, what brings me joy is solving problems. For whatever reason, right? I tend to obsess with problems that have not been solved. So usually, what really piques my interest, what gets me, sort of energized and excited, is when you're talking about something and you're saying, why isn't this done? And somebody says, well, because it can't. Wait, why? Right? If this product, if there's a lending product that is a mainstream lending product in the US since the early 80s, why doesn't it exist here? Well, because central bank doesn't allow it. That piques my interest. Or somebody says, there's this or that problem. A very close friend of mine in government called me just yesterday and says, hey, we have this challenge happening in liquidity in a certain sector. How can we solve it? And again, the economics and the math behind it makes sense. It usually really gets me energized.
You said your journey, and any journey, is not a series of successes. It's a roller coaster of ups and downs. What have been these key ups and downs for you?
Oof. There's a book called What It Takes, written by Steve Schwartzman, the founder of Blackstone, in which he says, and I remember when I read that page, I know it's a bit weird for a man to be in tears when reading a business book, right? But that was on That was the summer following the urban saga, right?
Tell us about the urban saga. Sorry, you mentioned a couple of times.
It was the summer following the urban saga,
Okay.
right? When I was reading Schwartzman's book, and it says, every entrepreneur knows this, that moment of despair where the only thing you're aware of is the giant gap between where you find yourself and where you had imagined your life and business. When you succeed, people see your success. When you fail, they see only the failure. Rarely do people see the inflection points that could have taken you in either direction. And it's at these inflection points that the biggest lessons in life and business are learned. Okay? I cannot be as common sense as that paragraph was, and I loved it. I memorized it, right? Okay, maybe I'm paraphrasing, but as common sense as it was, it hit really deep. It really resonated. I think urban was one of the most important lessons of my entire career, right? Being an entrepreneur at that time, I think the lesson learned, being an entrepreneur at that time, I think being stubborn as an entrepreneur is important, right? It's an important trait. You have to have conviction. You have to believe in what you're doing, and you have to continue selling the rest of the world, right? And I always advise entrepreneurs accordingly, and I say, look, your investors are, your partners, right? You shouldn't be told by an investor how to run your business, right? You have to have and own your vision and know where you want to go with it. And it's an on the bus, off the bus kind of conversation. Hey, Mr. Investor, I want to go to Ras Al Khaimah. You want to come along? If the investor wants to go to Al Ain, you say, okay, good luck, tawfiq, enjoy. Maybe you like Al Ain more. I'm more of a Ras Al Khaimah guy. Okay? So you have to agree on a destination. Or in most cases, this conversation is, I want to go to Mars, right? And you want to go to Hatta. So I'm, my destination is much further than what you're trying to do. So I think having conviction and being stubborn is very, very important. Risking other people's livelihoods, right, is something that an entrepreneur and a founder needs to take very, very seriously. I had days at the put it to you this way. I was taking cash advances on a credit card on 44% interest to make payroll, right? Partial payroll, right? I think there's a level of there's a balance between conviction and immaturity, right? That a founder needs to always have, right? So I'd say the lesson learned at that inflection point is, if you have to take out cash advances on a credit card to pay your employee's salary, then you probably time to fold, right? Maybe the time to fold was 3 months before, right? So I definitely think keep yourself surrounded by mature founders and investors who have done it before. Listen to advice, right? And I don't want to say put a limit to your ambition or your conviction or your stubbornness, but at least I always say to every founder, once you choose the life of a founder, you need to accept that you're no longer responsible for your life. You're now responsible for the lives of every employee you bring onto your business. So before hiring, you want to ask yourself, can the business sustain this hire? Before spending, a couple of million dirhams or a few $100,000 on a social media campaign, you ask, okay, fine, can the business sustain this risk?
You mentioned investors are partners. Now, there's an alternative point of view that says no, you are a capital custodian for the capital of these investors. So they're more than partners. You are responsible to deliver on their capital. And ultimately, if you disagree on the destination, it's their money, it's their capital, and you're an agent or custodian of that capital. They're the ultimate beneficiaries. How do you see it?
Look, there's a fiduciary duty that you have towards your investors, 100%. Now, when I say the partnership that I'm talking about is I always urge founders to say, spend as much time, right, as much effort as you can aligning with your investor early on. Right? Don't change your story halfway through. And look, I understand that sometimes you have to change your story. Sometimes you're forced to pivot, right? But invest enough time, right, aligning with your investor on the the core strategy of your business, right, and most importantly, your destination. Right? So I think the kind of conversations that I like to have with investors is one, before I even decide whether I want to approach this investor or not, is I'm going to be asking myself, am I aligned with him or her on core values? Right? What do I mean by core values? Right? This could be, integrity, honesty, truth telling. How do I want to treat my team? How do I want to hire? How do I want to compensate? How do I want to engage with the market around me? Etc. Um, so I think that إذا بدك الجانب الأخلاقي, right? من العلاقة, right? So that's the first thing that I want to do. And then two is invest the time in depth, right? Talking to your investors, not just about the strategy and the nirvana of saying, hey, we're going to get there. Talk about what happens, what if things go wrong, right? Because things don't always go the way, they don't always go as planned. We take a lot of wisdom from Mike Tyson, right? What did he say? You can always have a plan until you get punched in the face. So have that conversation early on with your investor and say, hey, if I get a punch in the face, what are we going to do? Right?
Some people worry that conversation may create confusion, potential perception of lack of conviction, distraction by a plan B when we should be all hands on deck. How do you see it?
Stay true to yourself as a founder, right? I think I always, and I advise this to founders, when you're having conversations with investors, right, don't mask who you really are, right? Because that investor is going to find out eventually, right? And I think, look, there's a question mark on integrity here. Right? If you're going in an engagement with an investor and you're pretending to be somebody you're not, right? Okay, fine. You might get $100,000 check today, or a $2 million check today. What happens in 5 years when things get tough and that investor finds out who you are? No, be open, declare, this is who I am, this is how I do business, this is what I believe in, this is my philosophy, right? This is what I will do if I fail, this is what I will do if I succeed. Right? At the Urban Saga, we had we had a series of private investors, and in a settlement conversation that I was having with one of them, what I prioritize above and beyond anything else is returning capital to investors, right? And the settlement was, by order of priority, say, number one, right? We had payroll liabilities at the time, right? Number one is we make payroll liabilities and we make our employees whole because those are the people who worked hard and followed and did everything they can. Number two is we return capital to investors. Right? And even if I have to return them over a payment plan or whatever it is, but if I can avoid losing other people's money, I hate losing other people's money. To me, it's like the second worst thing after genocide.
But return them from where? Return investors
from equity. If I can, if from equity or cash in a business or whatever it might be.
But from the business itself.
Yeah.
Now, some
if I have, even by the way, as a founder, right? If I have some cash, right? And I'm in a position to return money to investors, I would.
But why? They invest in the business, not in you personally. The business failed.
Yes and no, right? So, and again, this is a bit of a radical view, right? And I'm not saying that every investor, that every founder should, right? But here, one of the reasons why I'm very, very glad we did what we did at the time is your most valuable asset is your reputation, right? And being in a position as a founder that can look the world in the eye and say, I have not lost other people's money, is very powerful. Because now you're going to go back to them 4 or 5 years later and say, hey, I'm starting something. Are you in? And, think about it. If an investor says, this is a guy who returned my money when they lost money, right? What are they going to do to me when they make money? Right? But again, I can be quite radical, sometimes. And I'm not suggesting that it happens all the time. But if possible, why not?
Now, sometimes the situation founders find themselves in is, let's say they've raised a couple of $1 million. They've burned through $1.5 million out of that. They have 500K left. It's not enough to really execute on the plan. And they have two options. Either they return that $500,000 and call it a day. For the investors, it's going to be a failure anyway. You're getting 25% of your money back. Some of these funds would not be able even to redeploy the money because of their limitation. So at the end, it's a write-off pretty much anyway. Or you can take that 500K and make a low probability, but kind of a last bet. And maybe you make it, but more likely you will burn the 500K as you burned the previous 1.5. What do you do?
Good money after bad money?
Look, I would say it's low. It's money that has a very low probability of success. But if it succeeds, it turns the ship, as opposed to returning money that kind of really doesn't do anything for anyone.
What I would do, take a step back, right? Call my board, right? And my investors. Most important thing is be as transparent as it gets. If it is a high probability of failure, frame it as a high probability of failure, right? Don't convolute it and, hide it under facts and, put together fancy PowerPoint presentations. Declare, be transparent, be honest, be open. And then if you're honest and open and you declared it with that level of integrity, then it doesn't matter, right? Full disclosure always helps 100% of the times. If you're honest, and then remind them, send it in writing after the board meeting, just so nobody can say, one day you told me this and you did that. No, just be transparent, be honest. You'd be shocked how, look, people sometimes, and I know we have a mutual friend who always, or let's say sometimes undermines the VC community. There are some really good quality investors in this part of the world, right? There are quite a few investors who call themselves investors, but then there's also a few quality human beings in this business, right? And they've learned a great deal over the past 10, 15 years. Look, venture is 10, 15 years old in this part of the world. We don't have that much depth. The whole venture industry, right, is less than 50 years old? When was Sequoia born?
Yeah, probably less than that, yeah.
Yeah, less than 50 years ago.
Yeah.
So, yeah.
Mohamad, 3 people who have listened to our podcast today, let's say, one person who, I'll take you to the very beginning where we started, looking at Syria, very optimistic, very ambitious, wants to get involved in a way that's compliant with US situation on Syria, the UAE, the rest of the GCC. What's the best compliant, clear, transparent, kind of bulletproof way to get involved in the ecosystem without taking any risk in what some people may still describe as not 100% clear situation?
Yeah, get in touch with us at Sync, and we work directly with the U.S. Chamber of Commerce, right? We work with the U.S. Chamber of Commerce. We have a team in the U.S. Sync, by the way, is now becoming or has become a global organization. So we have a dedicated team in the U.S. As well as the ministry itself. So, and we're talking about the tech space, right? We have a remarkable human being, probably the most exceptional human being I have ever known in my life, who is our current Minister of Telecommunications. He's got an incredibly deep network, global network, and has set up systems and processes to manage that very concern. With the Department of Treasury in the U.S., as well as OFAC, U.S. Chamber, et cetera, and will guide you through. I mean, get in touch with me personally, and I'll put you on track to guide you to do business with Syria. Absolutely, we want people to do business legally.
Second is someone who wants to take their first step towards owning their dream home in the UAE or elsewhere.
Mortgagefinder.ae.
Third is a founder who wants to solve a problem in the prop tech space. You focus so much, and Abdullah has focused the same on his episode. It has to start with a real problem. What are some of the ways someone can unearth some of these real problems in the prop tech space in the region? What other countries other than the UAE as well you think people can solve in?
At the intersection of proptech and fintech. I think that's where the biggest opportunities are.
Mohamad, it's been an absolute pleasure. Thank you so much for being with us.
Thank you so much, Yusuf. Thank you for having me.
Thank you.